listening in on.
The books over here too for everybody to pick the trash.
We were just saying there are some books here that we're gonna go away this evening. Thank you for doing that. All right, I also want to introduce Raquel Naranjo, JD, financial planner. Did I say your last name right?
Yes.
Okay, all right. And Raquel is the other part of this wonderful business partnership. And she is with S.W.A.T Advisors Team, which is kind of like an ancillary partner with focus, and they are concentrating on the wealth management aspect of financial planning. Raquel is a dynamic and dedicated financial planner specializing in tax strategies and solutions. With a sharp focus on closely held businesses and private practice owners, Raquel expertly bridges the gap between tax and financial strategies, ensuring holistic solutions for her clients. She has extensive community involvement, and she is a member of the Latino Professional Alliance, as well as a member of the Santa Barbara Women Lawyers Foundation, and she continues to advocate for empowerment in her field. Raquel is more than a financial planner. She's a strategist, a community leader, and a dedicated advocate for her client success. So Amit and Raquel, thank you so much for being here tonight. Welcome. We'll let you take it away.
As soon as you get a ticket.
Okay, oh, okay, great. And I'm gonna leave this lovely line. All right, and, let me add something. Everyone online, if you do have questions, please feel free to enter them into the chat as we go along. And at some point during the presentation, we'll pause so that Amit and Raquel can answer those questions for you. So Soteria will look through your questions here when we break in the presentation, and we welcome you to add any input that you'd like. Thank you.
Hello, I hope everybody can hear me, especially online.
Can you there, it's unmuted now. Okay.
Okay.
Should be good.
Let's, can I make sure?
Well, he needs to talk into the mic.
Okay, Debbie, can you hear us? Debbie, can you let us know if you can hear us, please?
Yes, I can hear.
Thank you. Okay. Okay, Abby.
Good evening, ladies. And gentlemen over here, doctors. I would like to talk about this red line and green line, to understand what tax planning is. Tax planning is a concept that most accountants know. They post it on their website saying they do tax planning, but they don't do really tax planning. What they really do is projection. So what you need to do is take charge of your own financial trajectory, or we call it build your own economy. You need to build your own economy. That's what our government is here at Capitalist Society. Our Capitalist Society, our tax laws are built to incentivize our taxpayers to say, grow their own wealth, not the estate burden. Otherwise, we would all have been a socialist country. And the government created these codes because all doctors, anybody making good money, are generally business owners. That's what we all classify. And the government has created these laws to qualify everybody as business owners, to incentivize and save taxes. And you need to take charge of your financial trajectory. Sorry, guys. Well, I'm a chief tax strategist for the company. I'm a CPA certified tax. I'll read you what these acronyms mean. CPA, certified tax strategist, certified tax planner, certified tax coach, certified valuation analyst, certified tax resolution specialist, certified exit planner, and I have my LLM in taxes. I was the tax planner of the year for 2017 and was for 6 years straight, I was named as a top 100 CPA by Forbes magazine, but they used to do it. This is my team. So we believe that it is your right not to pay tax. How many people really believe that you have to pay taxes? Why?
Because that accountant makes me do it.
Because your accountant is a tax accountant, not a strategist, and they make you pay taxes. And we have actually a joke in our office that we use, CPAs plan to pay taxes. And that's exactly what happens. You guys end up paying taxes, which you should not be paying taxes. And you have a right. And if you go back to what Chief Justice Rehnquist, who was Supreme Court Chief Justice, Judge Bernardino, and other judges have said, evasion is a crime, avoidance is not. It's a birthright to avoid taxes. Even your third bill of rights, if you go to IRS website, says fair amount of taxes. But they not define fair as to be a specific dollar. They said fair amount of taxes. So it's up to you to use the tax laws to your benefit. It's not meant for the top 3% of the country. These tax laws were made for everybody. It's not only Musk paying zero tax or President Trump paying only $750. It's not that. It's your right to do the same thing. So you need to save taxes on your own. It's easy to criticize these people when they're not paying taxes. Buffett says he pays 1.8% versus the secretary pays 18%. Why? They use tax laws, and we have to do that. We use both tested tax laws and IRS plans. And it's your right to use them. We say ignorance of the law is no excuse, but why do we ignore the laws when it comes to IRS taxes? It's a normal tendency we ignore it. You have a CPA, every CPA is not a tax strategist, they are tax accountants, and they will be very good tax accountants. What they do, which they just did, April 15, they were busy plugging numbers into a tax program and saying, here's your tax bill, doctor. Thank you, go ahead and pay. What we like to do is use tax strategies that are good and valid upfront, so that you save taxes not after the 15th is done, but not wait for the refund, but we like to put that money. How many would like to miss paying an estimate of water rates? And that's exactly it's your right. You need to by reducing taxes. We just met with a doctor here who's in our midst, and we just showed him how we can save his taxes. It's up to him if he wants to say anything about it. So tax preparer, that's what they are, most CPAs. We call them glorified HR block or living tax. They're seasonal event reporting, they report history. They do not create history. We at tax strategies are all year round planning that requires teamwork, and we form a team with a financial planner team and everything, because tax planning and financial planning go hand in hand. Most taxpayers and financial planners do not work together. They do not even talk together. They talk at seasonal time. Or as a CPA, which I was one of them, not afraid to say that. I do it when I get a 1099B. But that time is too late. You already got your capital gain. What am I going to do with it? Nothing. It's done deal. The booze is cooked. The audit got overweight in the oven. What are you going to do with it? Nothing. No. The American dream, your American dream is founded on one thing, the tax code. There are 270,000 pages of tax code, believe it or not. And most CPAs do that now. You go to most CPA firms, they don't even have a tax research program. in their offices. Ask them what do they use. They use the tax handbook. Do you practice medicine using your handbooks? You read your books. You read everything, but most CPAs don't. They take a numbers and love. Like I said, tax code is an incentive scheme. It is meant to incentivize people to use it. I would like you to read this. Basically, what it means is they take everything, they tell you to shift incomes, shift expenses, or buy it. End of the year, they tell you, okay, you got too much. Doctor, can you go buy a 6,000 pound grocery car? But they haven't even done, will that qualify in an audit? Will it prevail in an audit? They don't know. They will do it, and they will be, what they are hoping for is when the audit comes in 2 to 3 years, we'll handle it then. They scramble at that time. When you do tax planning, you are preparing for the audit. Because we put the plan with the codes in. We know what it is, so that's why we provide audit protection with our program. We take that and we guarantee that we provide audit protection. So what is my incentive to pay your pay audit? Otherwise, I could be making money on our audit. One, I don't want you pissed off when an audit comes up. Number two, I don't want to pay too much out of my pocket for an audit. Because if I'm doing it, then I'm paying for my time myself. It doesn't make sense. So, red light, green light. That's what you saw up front, red light, green light, and we promoted to you. It's the tax code. You know what a traffic light, red means stop. Green means go, yellow means let's look at it. Same thing in tax. So let's discuss first how the tax are building foundation. Most people would look at the tax code and say, see 27,000 pages of costly code. And it is not. I'm not kidding, that 227,000 pages are a lot of tax laws in fine print. But the reality is certain law, there's a logic behind everything. You want to look at see the tax code also as a red light and green light. Red lights are really, like I said, you have to pay the taxes, and green light when you don't. So tax code, where the tax is imposed on self-employment taxes. Net investment taxes. These codes have been brought on by the government. You have no choice but to pay taxes. A lot of people, but I'll give you an example. A lot of people are 1099 and they don't know what is the right method, right entity structure, what is needed to save you taxes. We help you to save those taxes, figure out what the right entity structure. Most people, what they do is, or the attorneys or the CPAs, they go to, they say, oh, I want to be a S-Corp, I want to be an LLC. I'll give you a perfect example. I had a client of mine who wanted to be an LLC, and I said, you will be sorry, you don't want to be an LLC because you have to pay fees. He said, no, at that time LLCs were a fad and everybody got on the bandwagon. They have a purpose to do what the LLC is for. They're not for every business. So LLC fees, end of the day, his income tax was zero. So he had to pay the minimum 800 to his income tax. But he had to pay $6,000 in LLC fee, plus LLC fees based on gross, not net. So now he was hopping mad that he has to pay $6,800. And I told him, so don't. He paid the price. Then he was scrambling for the next year. Can I convert it to another thing? Yes, we did, but you had to pay the first $6,800, which you wanted. So that's what it is, self-employment tax. Another misconception that a lot of doctors, especially doctors in Kaizen, with the kids. And the CPS tell them, you can't take part of it. You can't do anything. You get a K1. K1 passes to your personal tax credit. And personal taxes, you pay self-employment tax on the K1. But I have tested with my own client in an audit and have been blessed 3 times. Every 3 times they have come back and given me, so I will use that strategy. They have set up a precedent with me that taxes and K1 can go through a corporation and not have to pay self-employment tax. Imagine I had a doctor who just retired. She was also in Kaiser. I think her hospital was right off the 60 freeway. And she paid, and for 20 years, I saved them. When they came to me, they were paying $60,000 in self-employment tax. Just imagine, 20 years they did not pay $60,000. And that money went into their own account. Not in Uncle Sam's, at a 5% rate, if you take it. How much money do you think that 60,000 converted to today? Not. And that is your money, you're giving it away. You need to save it, you need to put that money in your pocket. That is not supposed to be gone anyway. Stop donating, I would say. So the internal revenue code section, I can't see what says. So the one says, hereby impose a tax determined in accordance with the following table. And they have a set tables, you have to work with those rates and everything. And the self-employment tax has to be met. The red light basically says, once you have a self-employment tax or any income tax that means, pay those taxes, there's no way out. You need to take benefit of it. Section 1411, out started a NIT tax and net investment tax that started with President Obama. And then the Affordable Care Act, these are taxes that you have to pay. And NIT tax comes into play when you're selling your practices or assets that come into play all the time. You have to, there's no choice about it. But there are other costs, the medical expenses. Many of you have medical expenses in your health insurance. Now, if you look at your Schedule A, where you have the itemized deduction, if you look at the health insurance and the medical expenses, anything above 7.5% of your adjusted gross income or AGI is what you can deduct. That's all it's allowed. The first 7.5% of the AGI is gone down the garbage. Then you come down to the next level. State level taxes and DMV fees, property taxes. You're only limited to $10,000. When we know homes that you live in, and that's so state taxes that you pay on your incomes are always about $10,000. You need to be able to shift those to other ways to take benefit. Charitable contributions. You can have charitable contributions, which is generally, it's right now, it was 100% after COVID, then it became 60%, now it's going to go to 50%. Those are different things that can be happening to you, and you need to be able to shift it. We help you to legally shift those out from your Schedule A, get you that, and one of the biggest, if you have other businesses, as doctors, you do not qualify for UBI, deduction 20%. We can have those things shifted to other entities, other ways, so you can get some 20%, up to 20% deduction on UBI, so we can get the benefit. So, and then after your restrictions and you go into, at the end of the day, who wins? If you're in the green light zone, definitely you win. That's why we need to put you in those. And this is what basically what I said earlier, most CPAs, tax professionals are busy doing taxes. If you had gone to the CPA offices, most of them, during the last to April 15, you would have a tough time trying to find a good employment. You know what we were doing in our office? We were just doing plans. We're not busy doing tax returns. I never stayed late in my office doing tax returns. Because what planning we have got to do, we plan these things up front and save people taxes. And anything that we need to do, it will happen after the 15th. Because it's just basically what it's like. We don't know. So we have to come up with that. So we have got to, and what you have to do is look out for the green lights in your thing. That's what you need to work on. To see green light, those are the tax codes that are helping you to save tax. Not the red light. We jump the red light, we know we're going to get caught by the cops. So there's the IRS is no different. They didn't catch you. The key to cutting taxes are timing-based strategies like using 401k deferrals. Those are the easy one, deferred income until you withdraw from those funds. There are other, some of you have medical groups or medical offices with employees. You don't want to tie yourself to the 401ks. You can only put so much on it. But there are retirement plans that we, Raquel and another partner who can make it today. We try to get other plans that are not subject to ERISA, so you can put more monies into your retirement. That is meant for you, your retirement, not the basic. If you think about your basic Social Security, 401k, so let's start with Social Security. Think of a glass of soda. You've got a cup in front of you. Take that glass. IRS has decided you're only going to get so much of Social Security when you retire. Above that, it's like a kitchen sink, holes. Anything you pour into it, it pours out. Who are you paying Social Security for? Not for yourself. Did any one of you know me? Except a couple of people here know me before today, or met me at the event last time. But you were paying for my Social Security. Why? Did you love me that much? Are you paying for people crossing the border illegally? Yes. Why? You need to put that money in your retirement fund to make it grow for you and take a deduction at the same time. That's what the government wants you to do. That's why it's a billion. The income shifting strategies can be there, hiring your children. How can we hire your children? What can we do to get, why take care of, I give it, you brought your children into the world, but why can't IRS support them? Why not shift their burden to take care of them if you're running corporations, Schedule C and sole proprietors and all, why can't we shift them to the government? You pay them the salary, deduct it, and they are at a lower tax bracket than you. And let them pay for their own care. And at the same time, you can put some monies in for their retirement, Roth IRAs. The problem that you have is when you get to 18, then they're happens. Because then good financial planner will help that Roth IRA to grow. Do you think they'll need student loans to get through medical school? They don't want, because they are. Your problem is their peers are going to help them to spend that money. You will have to run, like one of my attorney clients, attorney friends did. His daughters, he had 3 daughters, who said, he told them this is what it is. One of the daughters was spunky enough to say, hey, Dad, what if I went to sewing classes? He had to change the bill program right away. He says, okay, you turn 32, that's when you get it. By that time, hopefully she's mature enough not to blow the money. So today, later on, all 3 daughters became attorneys and got married to attorneys. So, and the money then shifted to the grandkids. So this money keeps on growing for the generations, and you put that money. That's what you need to do. And you need to use code-based strategies. Code section 105B, that which allows medical expenses and other business expenses that you can already not take. Let's take a simple example of your home office. How many of your doctors work from home? Look at patient files or do anything. Don't you spend time reading even the medical journals at home? You do. But you can't deduct it because of your income level, it phases out. But what if we can take it and reimburse you for that and get a reduction on your corporations? We can do that. So how tax planning basically works? It's timing, shifting, code, and product. Product is insurance products because, like I said, insurance is an integral part of tax. You have to have insurance. Without insurance and insurance laws, retirement plans, without financial planners, you cannot have anything. What we like to do is you can go to your financial planners and all, most of planners or CPAs, don't see eye to eye. And when that happens, you are as a taxpayer are suffering. So we consciously made a decision that we are working together with financial planners in our practice. We take that decision, we always sit down, we proactively look at things. If there's a capital loss, capital gain, we like to harvest them upfront, not after the fact. So we look at all those upfront, make sure that you are the beneficiary. Our tax planning will work. You doctors are very familiar with it. We also diagnose. We diagnose too, not only you guys. We diagnose, we are your doctors when it comes to financials. We diagnose, then we prescribe what is good for you. And then we fill your prescription. Without that, you cannot. That's how a tax professional, financial professional needs to work. They are your advisors, not plan to pay tax or let them. And that's the only way you can fill. So basically, diagnose, prescribe, and fill. I'll give you a few minutes to take a look at it. Well, what do I call paying taxes? I have a pet thing that I always say. Paying taxes are akin to amputation. When you amputate somebody's limb, you're not getting it back, it's gone. Tax paid to IRS is gone. You're not going to get it. They'll spend it. You're not getting a penny of them, and they're not going to turn around and say, thank you for overpaying tax. They will not. I want to hear one time IRS came back and said, thank you, or on their voluntarily refunded you the money. Oh, but you screw up the tax returns, they come back right away to say, hey, you underpaid, pay us taxes. But overpaying it, they keep it. Unless you find it by yourself and amend your tax returns. Otherwise, they keep it. That's why they overspend money. A few years back, some of the older folks here, probably Dr. Pyman, probably remember when in Anaheim, IRS was caught partying in Disneyland. They were spending your money. And that's what it is. And the governments basically do is they have their budgets, they don't work with like businesses, zero budget each year. They take that budget and have to grow. So how we work is basically same. First time we do is a discovery. We meet with you, we do a discovery of your situation, go through your system and work on what your discovery is. Then we draft an engagement letter after we decide what the thing is. In the engagement letter, we put out your retainer and we put everything out. And generally, the way we work on it in the engagement letter, we will also write a guarantee that if we do not produce what we promise you, we'll refund the check. No questions asked. But you got to follow our plan to save yourself taxes. We also put down clearly what your things are, but we get paid upfront. Then we go into the drafting the final tax plan, and then we help you out through the tax implementation. Tax preparation, we don't charge you extra. It's part of your plan. It's a commodity. And you can go take tax preparation similar to if I want to buy a gallon of milk from Ralph's, or I want to buy a gallon of milk from Albertson. Or Gelson's. It depends on how fancy the place is, you pay extra penny for that gallon of milk. That works with the tax prep business. But nobody talks about tax planning to save it. We want to put that money in your pocket today or tomorrow. You need to create history, not write the history or read the history. Most CPAs record the history, but don't recreate it. So basically what I said, discovery, engagement letter, tax plan, tax implementation. That's how we go. And when we do tax plan, it's always through code-tested, IRS approved tax strategies. We will not go in the gray area. We will not break the law. I'm not willing to wear an orange jumpsuit and neither are you. I don't want us to be, you come to me with a tax plan that you met with in your parties, or you talk to some other doctor or somebody and say, hey, Amit, can you use this? If it's legal, I will use it. There may be something that I didn't read somewhere, but I'll make sure that it is and I will use it. But if it is not, I'll say, doctor, sorry. You may like the orange jumpsuit, I don't. So at S.W.A.T advisors, we consistently have been achieving minimum to 100% ROI in our tax plan designs. Or better. So if you can look at this, our standard way of how it is done. The bottom is where the income is. And if you left side, the light blue area, you see the income was $715,000. The tax was $235,000, and in their pocket they got $480. That's the standard way. And if you look at the green way, the same income, tax dropped to higher. I can't read it. 174, right? And then who took the back pocket of the most tax? You did. And that's what it is. I'm going to let Raquel go through the actual case. This is a true case that we worked out. This is a true case. Names have been passed.
Okay, can everybody hear me? So this is an actual case with two physicians, Dr. Dan Smith and Dr. Ann Smith. They're both about 45 years old. They're both physicians in the same cosmetology practice. Dr. Dan is making about $375K, where Dr. Ann was approximately at that time was making about $95K.
She was a part-time.
Yeah, she was, she had just had a baby, so she was on maternity leave. And their total income was $470K. It was a private practice, and they're an S corporation. Their original S corp net income was $560K. Adjusted gross income was 1.3, with a total federal tax of $328K. The total state tax, 104K, and the total combined tax is 432. So I'm just gonna jump real quick to the last one here, because after working with their team, you wanna go to the last one? So I wanted to go over the scenario before working with the team. As you saw previously, the income was 1.3. What their taxes they were currently paying was 432. This is a case study of 20 years. We're looking at an inflow of 598,000 with a net personal capital of, over the 20-year study of 18 million, if you can read that down at the bottom.
We adjusted with 5% growth rate and market has done better than 5%.
And so after working with our team, we have reduced that down to 52,000 in combined taxes. So I don't know about you, but 432 versus 52,000, anybody want to take that instead?
So we reduced the six S corp
Mhm.
down to 64K.
Yep.
And the adjusted gross income from 1 million plus came down to 300,000. Federal tax was 38.14 for state, 52 total. Like she said, would you take this or the previous scenario? And it is all done legally.
So if you notice here from the previous slide, the net personal capital was 18 million there, right? And that's again at 5%. And that's pretty safe. That's typically what we use between 4 and 5% rate of return. And then here, we're looking at 30 million. So that is just because we were able to put more money back into your pocket and we were able to invest that money
So the
instead.
money that did well would have ordinarily gone to IRS is now coming to you and your income did not change. Income is still the same. But you only paid 52,000 each year now. So the difference goes to you and roll, multiply it, see where the value goes. Which scenario do you guys like?
Right, and it all depends on the individual, whether it doesn't matter whether you're a W-2, whether you're a 1099, partnership, S corporation, C corporation. We work with all different types of physicians, entities, structures. We go through the planning with you on an individual basis because it's all very strategic to you.
Yeah, like she said, W-2, a lot of people here out there. You make a W-2, you cannot save taxes, you have to pay taxes. There are strategies out there that you can save taxes. When you buy or when you sell your practices, you pay capital tax. We have strategies that can mitigate your capital tax, so otherwise you're gonna pay hefty tax to the government.
And that's it for today, just the case study. Any questions?
Okay, let's start here in the room, if anyone has any questions here, and we'll start looking online too, but raise your hand if someone has a question, please. Dr. Bassa? So you have an existing, okay. You have an existing CPA, what, to work in concert with them, or?
If you have an existing CPA, we don't mind working with them. But most of the time we found, because they are not tax strategists, they will fight it. Because they know they are not the ones who brought the strategy. They will always argue it, but we have no problem with working.
So how does it work versus hiring a CPA and going with you versus using you as an advisor and keeping the existing CPA?
What we do is we do the tax plan, we help you to implement the tax plan. We talk to the CPA, and basically you have to tell them that, hey, got to follow these guys, use this. Because they're only doing, but now the downside is, you're paying us for tax plan. And we're putting the tax prep into it, whereas you're going to pay tax plan and tax prep.
Basically, if we go with you, you don't have to pay for tax. To do your taxes because you'll take care of that as part of the tax plan.
Yeah, because we already know what it is in your tax return. We know we can run through it faster, and get your tax return done.
And I bring that up because you're absolutely right. One of the couple of CPAs that I've tried in the past, it came a question of an oil program. He had no clue what he's talking about. So then I had to call the guys in the oil program to call him. And then he I'm not saying this in a negative way. Oh, yeah, there's some small loops somewhere, we probably, yeah, we can try it, kind of attitude. And I was okay with that because I knew that it was okay because I've used that similar strategy in the past. And my challenge was, oh my God, at least understand that you didn't know and say, I didn't know, I'm glad I know this. He said, oh, this is some of the obscure loophole that was there, and in good fairness to him though, I wish I just paid the taxes because I think I'm likely to lose all the money from the oil program that I put into. I mean, I'm being very honest about the whole program.
It is perfectly, because I just mentioned, hey, if you come to me with a strategy that out there, which I have not heard about, because it's 270,000 pages of tax code. Wow, I cannot know everything. I'm not going to be that lady that a few years ago, HR block had said, I know the tax code. That was their ad. I'm not going to be that, because I will admit, I will go and do my homework and then come back and say, doctor, this works and this doesn't work.
And the reason I bring up a personal issue is more for people's knowledge than personal. Because in my mind, I know I've always loved tax planning, but I've also kind of want people to hear the mistakes that I've made. And I think it's maybe helpful to them more than to you.
Exactly. That's what we want to do is help every doctor, everybody to save taxes, not overpay taxes. You can do everything and do it the right way. I'll give you another example. This is one rule called master's rule out there. I told a CPA, I said, you can use master's rule and give the client tax-free income and deduct it. She had never done it. She went to another CPA who said, it's a scam, don't do it. And the courts just proved it, that it's not a scam. It's a proven case. It was a doctor's case. The only problem with the doctor is I'll give you the case locally. And what the doctor did, deducted $300,000, which was unconscionable number to anybody who looked at it. And for the same property that did multiple times. Each family member did. You can't take $300,000 5 times. You can only take it one time and be reasonable. When you are unreasonable, IRS audits and takes it. And we don't want to do that. We want to be below the radar. Dr. Pai is very right. You need to work on it and do the right thing, follow the code, and do it. And most CPAs, like he said, don't know it. They will do whatever. And they will always come back with an excuse. That's why we work together as financial planners and tax planners to basically save your taxes.
The example, the 52,000 total taxes, did that include even the quarterly taxes and everything?
That was the total taxes he paid for the year. And the quarterly he paid now in 52 rather than 400. So that money goes to him. They keep it in their family for their children.
Now, with the savings, as you mentioned, most of us are in the 40% bracket that we're paying every year. And now you're telling us that we can get below that. And we're saving and just knowing ourselves that saving, sometimes we don't actually save it, we spend it.
Right.
Because now we have that money to spend. Do you also develop a strategy to take that savings and actually put it to good use rather than let us keep it and then
We always
spend it? Right.
We always advise our clients what to do. We always tell people to put money and what to grow. It's time to go put short-term rentals out there or long-term rentals. Now you as a doctors cannot qualify easily for long-term rentals, but short-term rentals you can. But there are other things that we can help you invest in monies, help in staying. That's where Raquel and Alfred come along and they help us on those areas. And help you to grow. In all our meetings, most meetings that you go to, most CPAs, you won't have your financial planner sitting there or anybody. When you come to our office, we're always sitting together. We're not talking separately. Remember Dr. Sanchez, when we talked, it was both of us. Or it will be up. We always are together. Because financial planning and everything goes hand. Let's grow your wealth, not wealth of IRS. And that's the bottom line is, and do it legally, don't break the law. People Mickey Mouse the laws. There's no reason to. Think we have enough tax codes in there to save you legal taxes. I had a client who went out and bought his CPA told him, buy a 6,000 gross weight car. He went out and bought a Rolls Royce. Yeah, it's a 6,000 weight car, but how can I justify the business? For section 1 and 62 says it has to business purpose. I can't justify a Rolls Royce unless he uses for transporting patients. So that's what it is. You got to make sure that it's done right. And a lot of people, CPAs will say, buy an equipment or buy this. And end of the day, that equipment may not be utilized by you for 6 months. It's money locked, capital locked, if you don't want to. A lot of people have surgery centers. And you're doing straight depreciations of the surgery centers. But when you don't know that you could accelerate the depreciation in there many times over and write off against your ordinary income. When you do that, who benefits? You do, nobody else.
Yeah. From a financial standpoint, when you're looking at your tax returns, a lot of times we're looking at the net profit for incorporated, right? Let's say an S corporation, for example. And that net profit flows directly into your 1040, which is now, the effective tax rate in the state of California is between 40 to 60% effective tax rate. So a lot of that tax savings will be captured on the corporate side. If you are incorporated, then we can capture that via maybe retirement type strategies or other types of strategies. So that way it doesn't flow into your personal return. And that's a lot of ways that we can actually bring back the monies back into your pocket. Now, it may not be free, like Dr. Sanchez pointed out, but it's still money that's kept into your family. And it's not taxable now, right? And instead of shifting into or flowing into your personal return, it's now captured in your corporate return. So that's one way of being able to work with us silo with a CPA and advisor, because we can look at those different strategies. A lot of times when we review tax returns, interestingly enough, that line number, because I think line 17, it says 0. And so that means that their CPA was either not letting them know that there's ways to be able to reduce their tax liability on their corporate side before it flows into their 1040. And like to Amit's point earlier, a lot of CPAs are simply inputting the data, spitting out the return and not looking outside the box. And it depends on who you're working with. If they're not properly licensed, then they can't advise you on the areas that we can advise you with our combined licenses, right?
Most CPAs are basically have one blinders. Where do we see blinders from? In the farms, on the goats, or the horses. Humans wearing blinders, especially with today's technology and everything, is something. Another thing that your CPA should be talking to you right now is estate planning. Your estate exemption is 12 million right now per individual. It's going to go away. In 2026, it's sunsetting to 3.5. If President Biden is getting elected, or the Democrats hold the office, President Biden really wants it to go down to 0. Are you planning for that? Have anybody talked to you? Anybody planned for that? No. The other thing, they don't talk to you about asset protection. We want to talk about your asset protection. How you want to protect your assets? You need to be, it's okay to have a trust, but what, that trust is no different from you. It's a revocable trust. It's good for wills, probate code, but what's beyond that? You need to save money for yourself moving forward, not giving it away and paying taxes. Any other?
So do you have a kind of method to consult and see if we would like to say?
We always like to, reach out to us.
Would you charge for your initial consult?
No, we do not charge you for initial, but you can reach out to her and she can get all your names out or pass our info to you. Reach out to us.
I'll be happy to reach out to her because it makes everything free for me.
And she pass the info.
I don't know, it's her fault, don't you know it?
Yeah, hey, we'll help you, no problem.
It's a free consultation.
Yeah.
Oh,
Yeah, what we like you to do is we'll open up a secure portal. We don't like to get information on emails. We like to get it in secure portals. We like your last tax return. For right now, we would say 23. If you know 23 is an extension, we like your 22. But we would like to have your P&L and balance sheet for 23. And if 23 is filed, then we like your P&L and balance sheet also for 24 to date, so that we can assess what's out there. And we come up with a assessment, what we call discovery, then assessment, then we do our engagement. We have a plan where we meet with you and do the assessment planning. We talk to you and we let you know this is what it is, this is your ROI, this is what your fees are, this is what it is. And basically, you shouldn't think of it as a fees. It's an investment in yourself because the money that we pay is coming, which you would ordinarily would have paid IRS. So it comes out of that. So it's not money paid out of your pocket. Let's say, for example, you pay IRS $100,000. Our fees are coming out of that 100. Yes, you're prepaying it, but you will get the money back if you have paid all your estimates. Or if not, you'll get it up that front right away.
We, go ahead, and after this, we're gonna open it up online and see if anybody wants to ask that way too, but go right ahead, Dr. Johnson.
So your fees is a percentage based on
We're not allowed legally to do a percentage base. IRS section 2 or 3 clearly says no percentages are allowed. But because a lot of people, historically looked at what it is, what we are doing it, and what our fees are approximating is 10 to 12%. 10 to 12%
Tax savings.
tax savings.
Let me just go up here so everybody who's online can just see me. Maria, let me know if this is working, okay? We just want to say hi to everybody on Zoom. If you have a question, you may have put it in chat, but feel free to go ahead and ask on your speaker. Yeah, we'll open up the mic for that. Does anyone have a question? No?
I've asked everybody in the chat to feel free to unmute themselves as well, and nobody is, so.
Okay.
Got that bit of a job.
Yeah, that's right. You guys answered well.
Yeah, anybody need help?
The difficulty we have is we don't know what questions to ask.
Right.
So the real challenge we face is we work hard, we try to make a little bit of money. And then we don't know, after that, we kind of get stuck with the process.
Yeah,
So my request is, I mean, I'm too old for you to really worry too much about me, but my generally is, you need to catch people who are coming out of residency and who have $500,000 in loans for their medical school, I believe US can make a big difference in their life
Yes.
than mine.
Actually,
Because these things really work better, the sooner you start, the better it is.
That's a great
Yeah.
point.
So I'm gonna request all the program directors to actually to have them have a consult with you guys. So that they can
Great.
start early, because this game
Thank you,
works
Doctor.
well, the earlier you start, the better you are.
yeah, doctor, you hit the nail on the head. There is a strategy, a lot of doctors coming out of schools, residencies and everything. They have a hefty student loans. And we can save your student, loan. We don't have to wait for President Biden to take your student loan off or forgive it. We can use tax laws to help you benefit and reduce your student loans.
The problem is they don't have time for you because they're now trying to work full time and also trying to take care of the families. And then they're trying to have a few friends on the side. That makes it really hard. There's not
Yeah,
enough
we
time.
work with them on we work with them on a Zoom.
Right, yeah.
I'm not,
We can't
I'm not
make
criticizing
people
anybody, I'm
say
just saying, I can foresee what you're saying. I wish I knew you 40 years ago. I was
Never too late,
never.
Doctor. Never too late.
That's what they keep saying.
Question, do you also advise on like, say, the market because of all the upturn, down?
Yes, our, one of the partners, Joe, he, Sida, he works and advises you in the market and helps you grow. And one of the hidden fact is that most of the banks give you up to $250,000 FDIC. If you work with their company, the Guardian, you can get up to $5 million, right? Husband, wife, FDIC insurance on your homes.
So as part of our team, we have an investment advisor representative who not only specializes but manages that piece. We're business strategists, so we work directly with the CPA to help them understand how to manage those strategies. And then he in turn is capturing those deductions on your balance sheet. So now it's all kind of working together as a whole.
So when the
But yes,
monies happen,
absolutely.
then investments happen, the monies grow. I have to get involved with your saving your taxes on that. I don't want to know it after the fact. I don't want to know it before the fact. December 31st is too late to do anything. I want to do it during generally we like to meet everybody that we have tax planned by the third quarter so that we can make sure we fine tune in the last quarter.
And the beauty of that is that we all like each other too. So, you know, but that happens, I mean, because so sometimes you have your CPA, you have your attorney, you have your advisor, you have all these different advisors on your team, but they're not talking to each other. And if they do, they're not agreeing with one another. So we're constantly at the table looking at your planning, understanding what it is that you need and what your objectives are versus, you know, Dr. Sanchez, you might have similar situations, but you're completely different and that your objectives might be different than Dr. Sanchez, right?
This may sound petty to you, but you've had your CPA for like 25 years or more.
I've been a CPA for over 30 years.
No, I mean, how do you tell your CPA?
You have that relationship, some of our relationship built, you know, there's a relationship built already with your CPA, right?
What's that?
How do you fire it, right?
Yeah, well, I can answer that question. I can answer that question. So, it's more or less about you have outgrown your CPA, right? And if they have not brought the strategies to the table thus far, then you're losing money.
Who's
And
losing money? You.
you're losing money.
So it's up to you whether you want to fire the CPA or pay on yourself. Choice is yours.
But it's more about outgrowing, yeah.
A compromise somewhere where you don't have to do that.
Like I said, we work with your CPA, but the thing is, you have to fight with your CPA and you pay twice the fees.
Because you're also doing the tax preparation.
Yeah, we're doing it everything in-house and it's easier for us to do it than you're trying to go to another, then you take a plan, go to the other person to do the same thing. Why? Why do you want to take the pain? You got extra time after your medical practice to fight with two CPAs now? I hope the patients are giving you enough fight during the day to, or when you're on call or in ER. I know your life because honestly, I was going to become a doctor myself. I did my pre-med before I became.
Then you got smart.
My brother is a doctor. My family has full of doctors. So I know what doctors go through. My oldest client, he is a doctor. My number one client is still my client. I started him in 1993 as my client. Nowadays, he brought his son, who just finished his fellowship, over a month ago, said, "You're going to do his." So I'm basically, they won't have an event in their home. Their kids now say, "If uncle is not there, I'm not going to have my birthday party." That's how it is. So we work, we go years. That's our relationship with our clients.
And really, it's up to you, right? I mean,
It's your
well,
choice.
Yeah, it's your choice. We give you the full financial plan, including, like I said, the investment advisors, the other types of advisors, tax attorneys that are on our team, working for us. And it works for us because it's very strategized in a way that helps you understand where you are, all the different areas in your life, not just one area, right? Taxes. And so we hear that time and time again is, my attorney isn't talking to the CPA, or the CPA isn't talking to the advisor, or they're not agreeing on the strategies. So it can be a little bit of a struggle sometimes to work with other advisors that are not familiar with the strategies that we implement.
Let me ask a simple question, doctor. You got $12 million in a bank account? Simple.
Well, if your CPS become your friend, you do.
CPAs can be friends. If they are good friends, they won't mind you to moving to somebody else. Because your friends should have your best interest at heart. But they can be your eyes to overlook.
But with Teresa, I says, threesome?
We've been having that similar conversation because we've also been with our, we build relationships with these folks. And it is exactly what you said. It's just a projection of what we're gonna have to continue paying, but not any kind of planning. And I've asked our tax accountant several times, what else can we do? And did not have any other answers. So how we break up with them is a good question.
And I want to reinforce because I had a CPA from 1987 until he died. And, when I asked him, "Hey, how do I not pay as much taxes?" He said, "You give me the income, doctor, I'll pay the taxes." That was his answer. And he said, "You give me the income, I'll pay the taxes and give you the rest of the money." Basically saying, there's no tax planning. And I didn't like the answer, but I kind of didn't really have the time or to go look for somebody else who knows something. I'm really glad the medical society has brought some new blood. Doesn't mean you have to go with them or not.
Right.
But I'll tell you what, I tell my patients, the cheapest thing in medicine is a second opinion. I tell my patient, I encourage my patient, when you have any doubt, please get a second opinion. And in many ways, we as doctors know that that's probably sometimes is required because we get our minds closed to what we're doing. Because we see the same patient over and over again, we can't see we don't have a fresh set of eyes. Sometimes I think this can be your fresh set of eyes. You say, okay, if I give you what I get and take it to your account and say, why should I keep you if I'm going to get this? That you're not making the decision. Your accountant makes, I'm sorry, I can't do this for you. Go with that.
Yeah, that's what.
You don't necessarily have to be the bad cop in this case. Just make it about how he's gonna help you. With my accountant for 32 years. So I know what you're talking about. Only reason I lost him is because he died. If he didn't die, I probably simply screwed. I'm saying this very openly because, I can give you the name, I can tell you everything about it. And that's not helpful to you guys. But I'm just saying, get a second opinion. To me, the County Medical Society is giving me a chance for a second opinion.
I agree with Dr.
Take a chance.
Take a second opinion. It's just like a medical practice. And one thing else, Dr. Kai is over there, but he's not my client.
No, I'm not.
So he's not pushing.
Unfortunately, I'm not. But, yeah.
We hope he becomes that.
And it's a free analysis, right? No cost to you through the association, and we actually provide you with the analysis. So you have that.
So you don't lose out anything, so it's heads you win, tails you don't lose.
I think another thing to think about, sort of the new eyes, is a lot of the new laws that have passed, including the Affordable Care Act, and the new law that passed last year. They're actually not new laws, it was actually just primarily changes in the tax law that allows them to do a lot of these things, and so the tax laws have changed so much that, you know, we need a sort of a fresh look at them and see how they can benefit. I mean, I have business friends that are business owners who are taking advantage of all of these things, and they ask me, am I taking advantage of it? And I'm not quite, you know? And so I keep asking them, well, why do you do this? And they'll come back to say, well, they have somebody who's doing their tax planning, not the tax preparers, so.
And I'm gonna just say one last thing. It's a shame that Warren Buffett said he paid 1.3% taxes and his secretary paid 18% tax. It's a shame on Buffett. He should have made sure his secretary paid 1.3% too.
Yeah.
So if you be proud saying, I'm gonna make my less, employee who pays less, I'm making her pay more and be proud of it, it's a shame.
Yeah.
That means he never treated his employees like his family.
True.
I'm not bashing Buffett, he's 99 years old, and he get his money anyway, so that doesn't matter. But I'm just saying, for somebody to make a stupid statement like that, it's pretty dumb for a smart guy like him.
I don't think he treated his family real well either.
No, I don't think he did either, but on the other hand, I mean, a lot of us kind of have an awe of these people. And I'm not anti-Buffett, I'm just saying in general, I'm anti-taxes, that's all.
Elon Musk has been preparing Tesla cars for a long time. For so many years, he paid zero tax. You know what Tesla said? How much does Tesla sell for, each Tesla car? And he paid zero tax. Using the tax codes.
Peter Thiel did that too. He flipped his entire, his stock as options that came during when he was part of PayPal. He got that, put them into Roth IRA, and he gets almost all his income free because it's in Roth. And it's like it's in billion.
Zuckerberg, another one, he does not live off ordinary income like the rest of us. He has put it all in what they call the Zuckerberg trust. Through that, it's such a complicated trust, through that, he gets all his income as passive income doesn't pay tax. Bill Gates hardly pays taxes. And you need to be in the top 3%. If you make money over $200,000, definitely aim for to be the top 3%. And in a medical field, getting to 200 is not bad.
Do you take non-doctors?
We take non-doctors.
The reason I asked was because I wanted to make sure, if I'm gonna say, hey, you guys need to talk to these people.
Yeah.
I wanna make sure that
Business
I don't
owners.
wanna say, no, I'm sorry, you're not part of the Bernardino County Medical Facility. I haven't had my meeting with you yet.
Yeah, I mean, we would appreciate that, right? Because the more
Well-
business we can bring you, the better, right?
Yeah.
True.
As long as you support my county medical society, I have no problem. I'm very selfish. I'm very honest, I'm very selfish.
You're
We're
just
going to
the
be
guy.
ready. We're going to be very active.
You want to be as active as you can here.
And we're going to be here, and we're not here long tomorrow.
Where's your office?
My office is located in Brea.
Not that far, we can hunt you down. If you were a lost come, I wouldn't.
Yeah.
Hey, I didn't even close during COVID, I was open.
Okay.
Yeah, we went to office every day.
Oh, my goodness.
But, you know, technology is also our friend now, so we can jump on a Zoom. I know that, you know, traffic and everything sometimes,
Yes.
but we're close by, not far.
And all those people who came through today, I really appreciate you because I've seen the traffic.
You experienced it, yeah, yeah.
So I have a friend of mine who lives 3 houses down where I live from. Whenever I'm late to his house, I say, it's traffic, what do you mean?
It's work. So I want to thank Dr. Javier Sanchez and Dr. Teresa Costa. You introduced us to these folks. And so it's kind of Dr. Pride to give credit to the Medical Society, but we are a product of our members and our leadership. So thank you all for making this connection and bringing them to everyone else.
Yeah, anybody needs, we are going to support them, any of the association members there that are running your association like RSM, these and everybody. Reach out to them.
They're phenomenal.
They are great people.
Yeah.
We really like them too. And thanks for hosting us. And reach out to them. They'll know how to reach out to us if you don't have our numbers or anything, and we can go from there.
Thank you for the wine.
I just want to say one last thing.
Yes.
So
I met Dr. Sanchez at the Los Angeles Medical Association, where we're also a part of. So we actually, the positions are our bread and butter. I'm actually located in Santa Barbara, California, so up north, right? But we work with the Central Coast Medical Association, Ventura, San Luis, up and down Central Coast and down into the LA area. So, we work with a lot of the associations. So just, a little bit of comfort that this is not our first rodeo, right?
So go ahead and take a picture of what's on the screen, and our contact info is right there. Reach out to us and we can help you out.
So Maria, we need to take a picture of that. Let's send that out to everybody in our following.
Yeah.
Yeah, we have
we have
Really
slides.
Yeah, good.
And we'll also email everybody the recording and the slides.
Okay, so yeah, we'll email this. to
Somebody asked me
everybody.
if you guys would be able to send the recording.
Yeah, so we'll make sure we email everybody.
A doctor friend of mine who's not a member of the society, that's why I'm gonna say,
Ah.
they'll become a member, then I'll send it to you. I'm gonna tag him,
That's right, that's
and he can
right.
afford to be a member.
Lovely, yes.
So,
Well, part of this is to add value to the association, right? And we want to drive membership, so absolutely. Okay, that's exactly why we're here, is to be able to support the society and be able to bring in membership.
Yeah, you're really committed to that and
Yeah.
you made that clear from the start, so we really appreciate that, right?
Yeah.
Because if you add value to the society, then plus more doctors are gonna come in, they're gonna, that's support.
It works, it helps everywhere, yeah.
this is the first one that we did it, and we will have a lot more. Allison can fill in everybody in that.
Yes, yes.
And we will be doing the next one as well.
Well, we were gonna do High Desert next, in a couple of months, I think.
my only request to all the people on the Zoom and here, please make sure that they come to the high desert one.
Yeah.
So people, the moment you get people to come, at least it'll be worth your time. And I really appreciate, I enjoyed meeting you guys at the high desert,
Oh, yeah,
Lala, that's where
oh, that's right.
and when you said they're coming back, I said, okay, I gotta go.
Excellent.
Thank you. Thank you.
Yes, oh, yes, and there are materials here,
Yeah, some of you out there.
scores, and a handout that they prepared for you. so
Yeah,
sure to have one.
We don't want to take it back. We can-
Well, we really thank you, you both, you're just so amazing, and you guys are wonderful. Thank you so much, Raquel. Thank you, everybody.
We have these cards on the table, if you're interested, yeah, just fill out your information.
I'm a family physician, I think.
Yeah.
I'm the doctor right now. Thank you for bringing those guys.
Thank you for what you're doing.
I gotta push my county medical society, you know.